Money.com and check out Jean Sahadi's great article breaking down the bailout plan. Everybody can understand it the way she's written it. That's CNNMoney.com. Jean Sahadi, we're coming right back with your calls and twits.
A rare opportunity for you to call in or to log on to twitter.com, issue1CNN, and ask your personal finance questions, anything you want to know about your house, your loans, your student loans,
what's it
your
called
debt.
when you do the Twitter?
It's actually called a tweet, Ali. He
I
called
said
it
twit.
a twit. You see, we're very uncool.
I didn't mean to offend anybody out there.
There are no twits here, it's tweets. Anyway, Hillary Kramer is an AOL money coach. Doug Flynn is from Flynn Zito Capital Management. Poppy Harlow is from CNNMoney.com.
Let's go to Bill in Mississippi. Hi, Bill. What's your question?
Why has there been no mention of the greed-induced skyrocketing gas prices, which inflated the prices of everything and devastated the financial stability of millions of households and businesses?
Yeah, you're absolutely right. That was definitely, as home prices were going down and people were paying higher interest, and then we had this energy crisis. We were paying more for gasoline, and we haven't even seen what it does to heating oil. People are not very worried about the fact that we don't talk about it as much. Gas prices have started to go down, but the price you pay hasn't really. Oil prices have gone down. We just talked about this in the last hour with Stephen Lieb, and he said, let's not forget this. We are fixing one leg potentially of the stool, but we still got housing, we still have jobs, and we still have those high energy prices. Good point.
Let's go to Twitter. A Welly is on Twitter and has a question for us. You're going to see that coming up here in just a second. Slowly but surely. There it is. How do we educate people to make them better consumers? That way they can make smarter decisions, which may have prevented this. Gosh, a little financial education, Doug.
Yeah, you know, it gets back to when you're in college and there's 25 credit card companies throwing credit cards at you and they don't give you any education on how to handle that. I often think that there should be courses and education, how to handle a checkbook, how to handle your credit rating, what that does to you long term.
Experience. It's all about experience. It's like our grandparents, because they lived through the Depression, never trusted the banks. The same thing's going to happen here, you know, and hopefully there will be matched with education and programs.
There's some interesting programs out there, these financial literacy courses, and you may think, I have a job and kids and a family and I don't have time, but you know, look and see if your city offers one, and maybe at a local community college or something, financial literacy.
A lot of them are making their way into college, high schools
and high schools and elementary schools.
Send your kid to one of those. Like, save their generation. Send them to it. Let's go to Spaz27. He asked a question that relates to something you said earlier, Hillary. What happens to a line of credit that you have but are not using? Can a bank take that back without notice? So when you were saying that woman should pay her $15,000, that was my only fear, that she pays it off and she then loses that line of credit, that credit card. That's happening these days, isn't it?
Right. The banks have been pulling back on the lines of credit. A number of banks have done that. So make sure, if you think that you have this extra security that you can tap into, you probably don't, more than likely.
Okay. So in her case, that might argue for her not paying out her credit card line, even though that's an expensive way to keep a line of credit open, because she's probably paying a high rate for it.
Right. Although it's more lines of credit attached to the house, equity, home loans.
As opposed to credit cards.
Right. A credit card at $15,000, chances are another one will come in the mail for her.
Okay, John is on the phone in St. Augustine, Florida. John, what's your question, sir?
I have a reverse mortgage, and I haven't heard a thing about how people with reverse mortgages are going to fare in this fiasco.
What do we know about that? Do we know anything about what they're doing on reverse mortgages? Is your rate variable, or is it fixed?
It's variable.
And has it gone up?
Well, no. I don't really know.
Okay. How long is it? What term is it?
I'm sorry?
How long is the mortgage for? What's the term of your mortgage?
Forever.
Forever. Okay. Oh, because it's a reverse mortgage, so you will just you won't have to pay that off. They've given you money against your house.
That's correct.
Okay. So if somebody's taken a reverse mortgage, they're making a set payment on that for the rest of their life, most likely, and they're using that they've used the equity. So it shouldn't have any effect on him.
They're getting the payment every month, typically,
right.
For the rest of their life, as long as they live. And a reverse mortgage, the first thing we talk about is that you are basically disinheriting your children if the whole thing goes to the full equity of the house. So if the house value goes down and the reverse mortgage is calculating up in terms of what you owe, eventually that crosses, you get nothing. They can't throw you out, which is why I don't think this is going to be any event to them.
Right.
But when you pass on, depending on what the difference is, it might be nothing, and you don't have anything. So
the only issue, of course, is if he wants to sell that house.
Right, they would do the calculation, what did you owe from that fake number, plus all those crazy closing costs that are in there. And
Yeah.
All right, let's go to Anthony in Lancaster, Pennsylvania. Hi, Anthony. What's your question?
Yes, my question is, why reward all these corporations when you can take the money and give it to the people that are holding the mortgage and pay off their mortgage, and that money will go into circulation, goes back to the mortgage companies, and they'll all be happy as a lark.
Kind of the point that you were getting at, right, Hillary?
That's right. I would love to see this $700 billion, which we all know is going to be $1 trillion by the time we're done. I'd love to see it go and just pay off everyone's mortgage and let everyone live in their home. Unfortunately, what's going on is we're taking care of Wall Street first. We're taking care of their losses. That's what this is all about. Even something like AIG, where do you think that first $25 billion went? It went to pay off loans and payments to investment banks that were owed to, that AIG owed.
Doug, what's the Wall Street angle of that, though? Wall Street has a different point of view about that one.
Well, you know, it's, is there any personal responsibility at all left anymore? I mean, can you just do whatever you want with no consequences? I mean, whether you're a person that didn't understand what they were buying or you were a CEO of a company that leveraged these things 40 times, you can't have zero responsibility. That's why I think you can't just make direct payments to people.
Right, and there has been some responsibility. AIG has that huge interest rate. Lehman Brothers went under, and ultimately, if you listen to what Treasury Secretary Paulson and what President Bush said today, they said, listen, this is to help Wall Street, help Main Street. This is to help make credit more available. This is to help people.
It was to stop the run on the banks.
It was.
At a very immediate level, everything was melting down. I was living through this stock market that kept going down, and it was spreading. It was viral, and it was spreading all over the world. If you think that they closed the Russian market, you think about what was going on in Europe. They had their losses were twice as what we were.
But if these banks fail, it essentially fails Main Street. I mean, we had talk of Morgan Stanley tying up with another bank, so we would essentially only have one independent investment bank left on Wall Street, one major one. I mean, that's a scary thought. They came and they did something. Hopefully, it helps everyone else too. Hopefully it's not just Wall Street.
To this day, still people look me in the eye and with a straight face tell me that they absolutely think real estate never goes down, ever.
Yeah.
So, you know, it does go down, and you need to put 20% down. You need to be able to make the payment, and there are people that got screwed over, and there's a whole bunch of stuff going on. But at the end of the day, if you can't afford those simple, basic things, and maybe we need to know what those are, then you know, you might not be able to own a house, and that's unfortunate.
This is why it's a great time right now to be asking for advice. So stick around. More phone calls next. We're going to check in on what you're saying on Twitter. The address there is twitter.com/issue1CNN.
All right, we're back taking your calls and tweets. Hillary Kramer is an AOL money coach. Doug Flynn is from Flynn Zito Capital Management, and Poppy Harlow is from CNNMoney.com. A tweet is when you get on Twitter and you send us an instant message. You go to twitter.com/issue1CNN, and your phone calls are coming in at 866-792-3399.
Let's go to the old-fashioned phone first. Larry in Sierra Vista, Arizona. Hi, Larry. What's your question?
Hi. I've been putting money into the mutual funds and stock market and my 401k for many years. But I also have some cash that I have set aside in savings. Is this an opportunity to move that cash into the stock market?
Larry, hang on the phone for a second. Doug.
Well, it depends. How much will you have left over in cash? You have to absolutely have enough besides this, that's your safety money, but certainly there are opportunities. What I wouldn't do pre-election this close is do anything major. If you're going to do anything, maybe dollar cost averaging in a little bit. I'm really not a proponent of dumping in a huge amount of cash.
You say dollar cost averaging, that means put a certain amount in regularly without regard to how the market is performing in that particular time.
Most people think of that on a monthly basis, saving monthly, but you can take $100,000 and divvy it up over 52 weeks and chip it in that way. That's the same effect.
Next caller in New York City, Lewis. Hi, Lewis. What's your question?
Two-part question about insurance. The FDIC insures you for $100,000 in the bank. Just say you got caught with your pants down and you had $150,000 and your bank went under. What happens to that other $50,000?
Lewis, before you brush your teeth on Monday morning, I want you to call that bank and take $50,000 of it, put it in another FDIC-insured bank under your name. The first thing you should do absolutely, then it'll be totally safe.
Okay, that's as obvious as getting your company to match your 401k. I mean, just do
Gotta
that
do
and
it.
you'll be safe. Let's go to Laura in Unionville, Tennessee. Hi, Laura.
Hello?
Hi, Laura. What's your question?
I want to know, the government insures my money for up to $100,000 in the bank, but the government's broke. What guarantee do we have that they're going to insure it?
That's a good point. The FDIC is an insurance program. It's not the same as that $700 billion that this plan may involve. It's actually separate insurance that the banks pay so that it's a separate fund. Now, that said, Hillary, they don't have enough money for a whole lot of banks to fail.
That's right, but I do believe that the federal government will come in and back up any failures. And that is one of the reasons why we have the $700 billion program in place right now, because there was this systemic failure taking place.
All right, Ashley's in Sherwood, Arkansas. Ashley, what's your question? Ashley, are you there? Hi.
Yes, I'm here. I was just wondering, the CEOs are making like record profits, and I just want to know if anybody's going to hold them accountable for what they have done.
Well, there's an awful lot of laws on the books about CEOs and all that. What do you guys think? A lot of questions about this, Doug.
I think they should hold them somewhat accountable. Certainly that they shouldn't get $50, $100 million bonuses. I think if you put 20,000 people out of work, there should be some kind of accountability. Unfortunately, the system just isn't gamed that way. They're set up to come in at low prices, get a huge amount of options, and get guaranteed pay packages. So, but like any other market, whether it's a baseball player or whatever it is, to lure the top talent, you have to do these things, and unfortunately, that's the system. But
there's some sense that this is, if this is described as a forest fire, you got to put the fire out, and then we will determine after this who started, what sort of regulation we should have, and why we should. But it's a question we get a lot of. Let's go to Simi Valley, California. Mary's on the phone. Hi, Mary.
Yes, I have a CD and a money market at Washington Mutual, and I'm allowed to take out the interest every month on both those accounts. Will I still be able to get my interest every month?
First of all, CD and money market, do they behave the same way in terms of their safety and how they're protected, Hillary?
No, they are different in the sense that a money market, as we've learned, has just, the buck has been broken, and that $1 now became 97 cents. But this is part of the Treasury SEC federal bailout plan, which is that your money market is protected. You will still be able to take out your interest there. A CD, you're locked up for however long your CD may be for. If it's for 12 months, you can't take it out until that point in time anyway. Right now, it looks like Washington Mutual will be solvent and will be fine and not to have any worries on Washington Mutual.
But keep in mind, there are a lot of people that are retired that take that monthly income off of it, and she might have a money market in Washington Mutual, which is a money market deposit account, which is FDIC insured. But if you're getting money every month off of these two things, if the bank does fail, you may get your money, you will get your money back eventually, but those interest payments will likely stop. There'll be a little bit of a hold on that, which gets back to if you have more than 100,000.
So what should she do if she's got a money market deposit or a money market mutual fund? What is her choice? What if she wants to? If she can't afford what you just said, that those interest payments may stop because you're depending on it. Where should that money go?
It cannot all be in one place. It cannot be all in one bank, and I think that's one of the lessons. If you have that one bank, maybe open up a money market mutual fund at a separate fund family, so you have two things going on. The chances are much more slim.
This is all really important stuff.
Yeah. Well, we're going to continue to take your Twitter messages and some final thoughts next on this special 2-hour emergency edition of Your Money.
Got a few more minutes for some personal finance, some personal responses to your questions. We're looking at twitter.com right now. What do you got, Allie?
All right, let's take a look at actually, I want to look at Weather North's question down there. I've got a 20-year variable mortgage, 0.5% above prime. Is this the time to switch to a fixed rate? Hillary?
Always a good time to have a fixed rate mortgage.
The spread between
now.
a fixed rate and a variable rate is not that different these days anyway.
Right, but rates are going to go up. It has to go up because we're going into an inflationary period. Because we're going to have to borrow money in order to afford the $700 billion bailout. Go to a fixed rate.
Lai Moreno, I do not have a 401k and I have a lot of student loans. The current climate is scaring me. What should I do? Doug?
Yeah, I think you have to take a look at how much money do you have on a monthly basis. If you are, I don't know that I would necessarily pay those student loans down any faster than they're required to if they're tax deductible and if they're a low rate. They are, make that regular payment and probably start putting a little bit of money away. That's really the lesson here. Start saving.
All right, we have talked about this before, but it's a common question. Newbie says, what will this federal bailout do to the savings rate and mortgage rate? Should the consumers be concerned? Hillary, you just talked about mortgage rates most likely going up. Doug, savings rates. We talked about money markets, money market funds, CDs. Do we think we're going to get more money out of those?
Well, I agree that interest rates eventually are going to have to go up, and so the benefit on the other side of that is that your savings rates and money market rates will eventually go up, but they're not going to go up tomorrow. It's going to take a little while, but eventually they will.
A lot of people have been asking me this: is it a good time to buy my first home? Gosh, that's.
And Hillary, I mean, we had that one question, and it's turned out to be it depends.
It depends. I said it's always a good time to buy if it's for the right reasons, which is you're going to stay there for the rest of your life, or if it's a family member. But otherwise, wait. We could see another shoe drop in the real estate market, and we probably will be.
What we know, Doug, is that depending on how old you are and how close you are to retirement, the answers to a lot of these questions are slightly different.
Sure. And this person, you know, if you save a little money, the price goes down, but the interest rates go up, the net effect might not be anything. So it comes down to the deal. Is it a good deal for you long term?
It's a good time to think like a Wall Streeter when they make a deal, although not like Wall Streeters have thought in the last couple of years. It's not about whether it's a good time to buy a house. It's whether or not that house is right to buy at that price for that interest rate. Is that what you're saying?
Yes, and for that person in their situation. Can you afford it?
You people have been excellent. Thank you. We had a great panel. Hillary Kramer, Doug Flynn, and Poppy Harlow from CNNMoney.com. Please go to CNNMoney.com and check that out. There's great stuff on there.
The economy is issue number one. We here at CNN are committed to covering it for you. Stay with CNN every day for the very latest from the CNN Money team.
We are not leaving this story. Right now, I'm joining Roland Martin. 6 weeks to go to the election. Starts right now.